morning, everybody. And yes, Mr. Lula.
Good morning, Mr. Commissioner and members of the Commission. We are ready to proceed. Our next witness is Mr. Abdul Malik Salih. Is ready to take the prescribed oath, Mr. Commissioner. Stand up and put on the light.
Good morning, Mr. Salih.
Morning, Commissioner.
Do you have any objection to taking the prescribed oath or affirmation?
No.
Do you swear the evidence you're about to give will be the truth, the whole truth, nothing but the truth? Raise your right hand and say, "So help me God."
I do, so help me God.
Thank you very much, sir. So you may be seated.
Thank you. Mr. Salih, can you just have the microphone right in front of you and will you please speak up?
Sorry, I see somebody next to him. Is that?
I apologize. It is my friend and colleague, Mr. Riley. He can just introduce himself. Thank you, Mr. Chair.
Thank you, Chair. John Riley, I'm representing Mr. Salih in the Commission.
My apology, Mr. Riley. Thank you, Mr. Commissioner. Mr. Salih, before we start, is it correct that when Dr. Survey testified before the Commission, you were present?
Yes, Edward Luma.
Is it also correct that when Nahid Khamaldin testified, you were here?
Yes, I was.
You have prepared a statement for the Commission.
Yes, I have.
Will you please start with the statement and tell the Commission who you are, where you're from, your qualifications, etc.?
Okay. Okay. I, the undersigned, Abdul Malik Salih, hereby state as follows.
No, I'll have to ask you to speak up a bit, please.
Okay. I obtained my BCom from the University of the Western Cape in 2001 and my BCom honors at the University of KwaZulu-Natal in 2003 and qualified as a chartered accountant in 2007. After qualifying as a CA, I was employed with the Auditor General at Bellville in their performance audit and international audit divisions, and thereafter held positions at Pioneer Foods and Vodacom. In and during 2007, I had my first interaction with the Sekunjalo group of companies when I was recruited by Khalid Abdullah to take up the position of joint financial manager with Nahid Khamildin. In the time that I was employed by Sekunjalo, I reported directly to Abdullah.
Can you just, for the record, tell the Commission what is the position of Abdullah in the Sekunjalo group?
At that time, Abdullah was the financial director of the group. Currently, he is the group CEO.
Thank you.
Okay. I left Sekunjalo in 2009, and I was thereafter employed with Media 24 until 2014, when I had contact with Abdullah, who advised me that he was now the CEO of African Equity Empowerment Investments, AEEI. He then offered me the post of Head of Corporate Finance, which I accepted. I again reported directly to Abdullah. I served on the board of AEI from February 2018 to January 2019. I resigned from the AEI board when I took up a position of Chief Investment Officer, CIO, of the IO Technologies Group in January 2019. On 6 May 2019, I resigned from the board of IO, but I continued to do the work of Chief Investment Officer as part of the management team.
Mr. Salih, can you tell us why you resigned from the board of IO?
Commissioner, I think it's to do with obviously the pressures, the medias, the governance issues that have arose, and yeah, I wasn't comfortable within the current environment and the pressures of everything internally and externally, and therefore I made the decision to resign off the board. Okay. I've been subpoenaed to appear before the Commission of the Inquiry into allegations of impropriety regarding the Public Investment Corporation and to make available all documents and records relating to the investment by the PIC known as IO Technologies and to produce the following documents. All financial records in respect of the above matters, in particular payments made to third parties from funds invested by the PIC, and all correspondence inter alia, emails, facsimiles, or memorandum between myself and other parties involved, including the PIC regarding the valuation of the shares and payments made after the listing of IO and the JSE. Any correspondence between legal representatives, sponsors of IO, and management regarding the listing of IO. I must immediately point out that although I have been requested to produce the above documents, that the documents and information to refer to are in the possession of IO, I will however make available and provide such information as is in my possession and will testify about such matters that fall within my personal knowledge. When I joined AEI in the latter part of 2014, the AEI board had developed a strategic plan known as Vision 2020. The primary objective of the strategic plan was to double AEI's profits and to take the assets and assets/investment base to more than R1 billion. I understood that this would be achieved by listing two of its primary assets being fishing and information technology. The strategic plan was
Mr. Sali,
spearheaded-
sorry,
Yeah.
Mr. Sali.
Yes, sir.
Just a question here, on paragraph 9, what was the asset value then, and what is it currently now? So whether the market cap stroke net asset value?
So the market cap at that time was around 330 million.
Get closer to the mic because I
The
cannot
market cap at that time, Commissioner, was around about 330 million, and I'm speaking under correction, it's just from memory. The NAV was pretty close to that, on about 300 million. It then subsequently, over the next 5 years, pretty much organically went up to a peak of just over 3 billion, and the NAV with the underlying assets and investments being valued was close to being the same until and before IO was listed.
Just the bump from this is like more than 10 times at the peak, of 300 million to 3 billion. What was the contribution, the contributor to that rise in the market cap?
So the market cap, I can't answer for that. That was the trading, the market trading that happened. But from an NAV perspective, what I can remember is there were strategic investments made in Saab, Grintech Defence at the time. There was organic growth within the fishing business, also acquisitions and the listing of that fishing business. And there were, I think there was growth a lot in the Pioneer Foods shares that were available at the time. It was bought at about 80 million, it went up to about 300 million, so that was part of the kicker as well. So there was various assets that had grown over time and certain investments. This is all pre-IO.
Okay, so, all right, okay, thank you. Thanks.
Yeah, I think so, if I can just...
And sorry, just another thing. What is the market cap currently?
I think the market cap in the last week has come back down to about 1.2 billion. The share value is about R2.55.
Yeah, all right, so 1.2 billion. All right. That's AEI, yes.
AEI.
That's the market cap of AEI. Thank you. And just another question, I'm just going to ask you, especially when we talk about the valuation, to keep referring to the annexure somehow, to take us through some of the issues.
That's perfectly fine.
All right, thank you.
When I joined AEI in the latter part of 2014, the AEI board had developed a strategic plan. Okay, I was there already. Let me just go. The strategic plan was spearheaded by Abdullah, who during investor presentations done by him on a regular basis indicated that once the fishing or information technology businesses achieve turnovers of at least 500 million, the aim was to list on the Johannesburg Stock Exchange. In and during 2016, Abdullah informed the Premier Fishing and AEI teams that we should prepare to list in Q1 of 2017. The external advisors should be informed about this and the project team should be established. It is fair to say that at the time, the teams had little knowledge of listing on the JSE and the teams would rely substantially on the advice and guidance provided by external advisors to drive the process.
The external advisors in that circumstance were?
From a sponsor broker, that was PSG Capital. The legal team was Cliff Decker and Dawson Edwards, and the corporate finance and presentations were done internally by AEI. Okay. At the time, the rationale was that since the fishing industry would have to apply for fishing quotas in 2020, and because the Department of Fisheries and Forestry was extremely focused on empowerment and community participation, that Premier Fishing as 80% black-owned entity would ideally position for acquisitions. In addition, Premier Fishing had the ability to expand its non-quota based abalone farm, which it had been operating for more than 15 years and which delivered strong cash profits annually. During this process, Abdullah informed the team and its advisors that the PIC was interested in engaging and understanding the listing and that we should present to them and others during the investor roadshows. The PIC and other asset managers undertook a rigorous due diligence process, and AEI and IO teams embarked on investor roadshows after the PIC and others committed to invest.
Sorry, can you elaborate on others? Who the other asset managers were and others committed to investing?
So PSG Capital did the introductions to Stanlib, Acantus Asset Management, there was Nedbank and their private wealth individuals, and quite a few more. I think Investec also had an allocation. So there was quite a broad base introduced to us by PSG Capital.
That's your other asset managers. Is that just different from others who committed to invest?
So it was basically the PIC and those asset managers. It wasn't really anyone else. Okay.
What date was this done? What date?
The 2nd of March 2017 was the listing of Premier. 2nd or 3rd of March.
No, the roadshow, in terms of the roadshow, when
okay, the
was
roadshows
it?
actually took place around about January of that year, and some of the due diligence drives out to the farms and factories were done in December the year before.
All right, so Jan 2017.
Yeah.
All right, okay.
It is necessary to point out that at the time, AEI owned 100% of Premier Fishing. Premier Fishing managed to raise approximately 500 million, with AEI diluting its shareholding in Premier Fishing down to 55%. The PIC subscribed for 20% and the balance was taken by a wide spread of other entities and institutions. The JSE listing of Premier Fishing took place in March of 2017.
What was the price? What was the share price?
The share price was R4.50 and the total market cap at R4.50 was 1.2 billion.
And did everybody pay the same price?
Everyone paid the same price for those shares.
Yeah, another question is that then what was the PE or the forward PE for the Premier Fishing listing?
That PE was around about the 12 mark, if memory serves correct.
Yeah, was it 12 forward or 12, historic?
It was a one year forward PE.
1 year forward, 12 PE, all right. And did it have the normal spread or a good spread of asset managers? Just give me some sense.
So the free float was challenging as it was in IO, because the balance had to be struck between maintaining your empowerment ownership credentials, which is difficult if the open market holds the shares in trade.
Yeah.
But the 45%, I think, ended up with close to 30-35% free float, open market float.
Okay, but in terms of the big shareholders, who would have been? I know the PIC, you say
PIC
here,
20%.
took 20%, yeah?
Stanlib was a big one, but that's for, I think, the private wealth clients,
Okay.
as well as Nedbank.
Okay, all right. Okay, thank you.
Okay. Build up to the IO listing process. During May 2017, Abdullah told me that I should consider starting high-level preparation for the IO listing. He told me that our role would be different from that played in the listing of Premier Fishing, as the IO listing would be led by industry experts from British Telecoms and externally. He explained that he and Dr. Iqbal Survey were on the BT board, and that they, together with BT CEO, had identified significant opportunity to leverage off an innovative empowerment model.
I'm sorry to interrupt you there. For the record, can you state who was the CEO of BT at the time?
Mr. Kevin Hardy.
No, I think you make a mistake.
No, it was.
It was Hardy at that time. It was not,
No.
It was not Oliver Fortuin.
No.
Thank you, it's my mistake, sorry.
Okay. I was also told that the senior industry leaders were interested in heading up IO. Abdullah mentioned that the previous BT CEO, Oliver Fortuin, was interested, and that Fortuin had engaged the potential CFO and other executives. Abdullah also mentioned Arthur Matamburo, the CEO of Africa Technology and Business Institute, who he stated would assume an executive role. I was impressed and believed that considering the individuals referred to, that this would add significant credibility to the IO listing. Later on,
Question, just let's go back to 15, paragraph, Premier Fishing listing.
yes,
The people who work on the IO listing, are they the same people who worked on the Premier Fishing? Because it seems to have gone
Yes.
pretty well and pretty smoothly versus the IO listing, which didn't. So I just wanted to know, is the same teams and all that?
same teams, except for obviously the executive management of Premier versus the executive management of IO. But it's pretty much the same teams, and the legal advisors were different. Weber Wenzel assisted on IO and TGR, whereas with Premier Fishing we had Dawson Edwards and we had Cliff Decker.
Yeah, and that listing, did it have a lot of companies to acquire in the future, meaning that its value, was it based on future acquisitions, or it was mainly the organic growth, the Premier Fishing listing?
So it had two primary drivers. The one was acquiring businesses that needed empowerment, but a big component of it was to get into a space where the non-quota driven businesses was a bigger part of the business. So your aquaculture was non-quota driven, so a lot of the capital was earmarked to build out and to triple the size of the farm.
So there were some companies to acquire, but probably small companies.
So the one that was quite sizable, that came about 6 months to 9 months later, was Tolado Fishing, and that made Premier the largest squid operator in the country.
But can one say that the bulk of the future growth was based on the current business versus IO, where the bulk was on future business? Can one say that?
I think you'd have to say that it's a split between organic growth and predominantly the farm growth, but there was a view of acquiring as well.
But Premier Fishing growth was more organic than acquiring companies?
From
Would
a
you say that?
percentage split, I'd say it's about a 50-50.
A 50-50 split. And then the IO split? Can you remember
So the
that?
IO valuation model, when we get to it later, was, and the forecast which drove the valuation did not include any acquisitions at that point.
Yes.
And I'll explain the reason for that when we get there, as none of the terms of term sheets had been signed off at that time.
Okay.
The IO valuation was driven from acquiring large multinationals who required empowerment, and predominantly through our partnership with BT.
Okay, all right, we'll get there then, yeah. Thank you.
Later on in the process, I would understand the innovative model referred to by Abdullah was an empowerment model developed to respond to a bid to provide ICT services to Sasol. Sasol had indicated to its service providers that it needed to increase its empowerment credentials and would be requesting action plans from the service providers on how they could support this objective. The model would see IO act as the primary service provider to Sasol, with certain services being subcontracted to BT. As IO was an existing ICT business and was black-owned, Sasol would increase its empowerment score by buying through IO, yet still have the operational continuity as BE would be a subcontractor to IO. The idea was that IO would act as a sales prime.
Can you please explain that term to the Commission, sales prime?
So we learnt of this term obviously from the BT teams when we started the engagement. So from an IT industry perspective, you'd find certain companies, because of this, either their sales expertise or their empowerment credentials, as one example, would be the front, for a lack of a better word, to sell to a customer. And then they would subcontract to the guys who would actually have the capability of performing those services. And one of the key components of making this model work was a legal opinion provided to ensure that IO was not seen as fronting in terms of the BEE Act.
Thank you.
During the period May...
Just a question there. So, in terms of this sales prime model, would the bulk of the revenue go to the subcontractor, i.e. BT, or would it go to the BE company? Do you know the ratios there?
So I can't off the top of my head recall exactly what the ratios were, but there was a 35% margin modeled into it, where BT would charge a certain cost, and then over and above that there'll be a percentage margin on top of that for IO.
And would the BE company do some work, or they would just win the contract and parcel on the work to BT? How would it work?
So as part, Mr. Commissioner, as part of the model and part of the legal opinion that we received, IO would have to do a lot of the services itself, and then the ones where BT were the experts in the area, they would then take on those products and services as subcontractors. So one of the main criteria required not to be seen as a front is that the black business or the sales prime would have to have had some sort of history in the ICT environmental space, and IO had about a 20-year history with its older subsidiaries.
Okay, all right,
yes.
Thank you.
Okay. During May, where am I now? During the period May 2017 through to the IO listing in December 2017, a host of individuals played various roles in building key elements that eventually resulted in IO pre-listing statement. These roles and key elements thereof being the listing structure, storyboard, value proposition, and ultimately the proposed valuation is set out herein after. During the listing period, the team had various interactions and meetings with Dr. Survey, who set the tone for the PLS and provided expectation of the value of IO.
Sorry, can I just ask you, Advocate Libber, do you have Dr. Survey's statement when he was appearing before the Commission?
Yes.
Around, can you read it into the record?
We'll do that. I'm going to go there now.
Okay.
In preparation for the first meeting...
I'm sorry, before you go there, just for the record and for the Commission, you talk about team. I believe there were 3 teams, a BT team, AEI team, and an IO team.
Yes.
Can you just place on record who were the team members of each team?
Okay. So for the purposes of the pre-listing statement, the BT team was predominantly 3 individuals: Kevin Hardy, Tian Olwagen, and to a lesser extent Benny North. Then the AEI team would be myself, Nomvuyo Dube, and Njabolo Jiki. Yeah, that's the three people. And then from an IO perspective, it would be Naid Khamildin and Chwaita Peter. There are other individuals that would play a lesser role in the pre-listing statement as well.
Sorry, can you give the names of the IO team again?
The IO team was Nahid Khamildin, the CFO at the time, and Chwaita Peter, who then came on much later in the process as the new Group FM.
Now, you were present here when Dr. Survey testified.
Yes.
And you will hopefully recall when he was questioned by the Commission on his involvement.
Yeah.
He turned around and looked at the back where you and other people from his group were seated. And he said he was not involved. The Commission can ask these very qualified, highly qualified people about the process.
Yes.
Is that correct?
That's correct.
And I read from his statement under oath, I am not involved in that at all, but I can certainly get the response to you from the AEI corporate finance teams and AO teams, happy to get that to Advocate Libbe. Recall that?
I do.
So in essence, you stand by what you're saying here, that he was involved as reflected in your statement throughout, but in particular that his expectations of the valuations and the tone will be less.
In the build-up to the pre-listing, yes.
Thank you.
In fact, we will deal in detail with that, and just to sum it up, as I've gone through your statement and the annexures attached thereto, he was involved from the start. Is that correct?
Yes.
Please continue.
In preparation for the first meeting with Dr. Survey, Rodansho Nock, part of the legal team at Sekunjalo, and Khamildin worked on a PLS framework, the first of which I received on the 19th of June 2017. The PLS framework is based on a precedent provided to them by Abdullah on the 5th of June 2017. On the 4th July, I took all the available data from BT, IO, and AEI teams and incorporated it into a pre-listing framework prepared by Khamildin and Nock. My initial valuation was based on projected profits for the existing business and the projected profits for 2019, which was sourced from audited valuation models performed by AEI's accounting team annually. The valuation included 30% of BT's earnings, which would move over to IO as part of the listing process. These aggregated profits were then multiplied by a price earnings PE multiple for similar listed companies at the time. I arrived at a valuation of 2.3 billion. Sometime during the week leading up to the 10th, myself, Abdullah, and Khamildin met with Hardy and Olwagen for the first time in person to work on the PLS. This document is emailed to Dr. Survey on the 10th of July 2017. I attach in this regard Annexure AS1.
Okay, let's just get there a bit and just to understand how you arrived at that briefly. If you can just summarize it, because I see A2, AS1, AS2, I think, AS2, yeah.
AS1.
That you got 2.3 in the last column on, profitability. Yeah. It's on a 15 PE. Okay. Yeah. So if you could just take me through briefly this valuation.
Okay. So what we effectively did was take the audited discounted cash flow valuations from our finance team that report annually. Mm-hmm. And in there they'd forecast 5 to 6 years forward for each one of the investments. Yes. And we were in 2017 and we looked 2 years forward to 2019's profitability.
Yes, yes.
So the 2019 profitability as indicated in each one of those valuations are stacked up in the right-hand column, which is profitability 2019. And then a portion of what was believed to be the associated income of British Telecom's 30% was also included. The aggregated profitability was then 157 million, and we then took comparable ICT businesses of scale that were listed in the Johannesburg Stock Exchange and came up with an average PE and effectively used a PE of 15 against those profits and arrived at a 2.3 billion valuation.
The 6.14, what is that?
The
6.14, just above the 15 PE there.
Okay, that was the PE if you look at the weighting of doing the same exercise but on the discounted cash flow, assuming that you'd use a PE of a PTY, so a non-listed entity.
Yes, yes, and the value would then be 1.3 billion rand.
Yes.
Okay, so if you use that, the value is from 1.3 to 2.3.
Yes.
Roughly. And then the BT valuation was how much?
That was 650 million on the discounted cash flow basis.
Yeah, it was not yet 1 billion rand.
No.
Okay, all right, thanks. And then the 15 PE is just below the average of the other companies which you did there.
Yes.
Yeah. Okay. All right. Thank you. So for the first part of the valuation, we're on 2.3.
Yes.
Roughly. Okay. Thank you.
Okay. After this email is addressed to Dr. Survey, Abdullah requested that I update the valuation numbers using information received from BT to determine what level the valuation could reach with this data included. On the 17th of July, Hardy emails a document to Abdullah and Dr. Survey titled Project Zebra. A copy of this document is attached marked AS2. This document, together with a proposed alliance agreement between BT and IO and the empowerment credentials of IO, would ultimately form the basis of the valuation of IO is arrived at. As will be noted, Project Zebra identified clients and customers to be transferred from BT to IO and is used as the base of IO's profitability and the valuation in the pre-listing statement. At the time, I understood that this was a confidential document used to pitch the IO model to BT International for approval. Abdullah forwarded this document to myself and Hamildin. Over the next few days, Hardy and team provided further information and most notably the list of companies to be targeted for acquisition and which would be incorporated in the PLS. The companies targeted include I1, Motivity, Range Wave, M2D, Echo SP, Silicon Sky, 365, AfriHost, FiberCo and BT's network assets.
Just to stop you there, so AS2, the annexures, what does it talk about? Because it's just an email. Hi, yeah. Just explain what is it about?
Okay, so the document after the email is effectively a project document.
Oh, I see. Okay, is this main one? All right. Okay, I get it. Okay, all right. No, it's fine. It's fine. Then the next question is this: is that in terms of the information supplied by BT, I mean, how were you going to use it in the PLS? I nearly said PSL. in the PLS, if it was confidential.
Mr. Commissioner, at the time we were working simultaneously with the BT teams on the Sasol bid. So I think the Zebra probably links back to the Sasol bid. And we were given this information from the CEO of BT at the time. So the teams of AEI and IO obviously accepted the fact that the information's coming from the CEO and the team directly himself, and therefore is usable within the valuation.
Yes, sir. All right.
After this additional information is incorporated in the IO valuation model, IO value increased to 5 billion. On the 19th of July, Dr. Survey
Yes,
requested...
sorry, just to come back, Project Zebra.
Yeah.
What was it about? Is it market sounding or it was just a strategic document?
So it was a strategic document which showed why BT needed to improve its empowerment credentials to either take up more of customers like Sasol's budget or share, or to increase its market share in general. So it basically said BT was at a level 4, but it only had a 30% empowerment shareholding.
Yeah.
The ICT codes at that time, as I'm told, changed where the ownership credentials became critical, and the view was that as an ICT business you needed 51% black ownership and more than 30% female ownership. So Project Zebra explained and described the scenario to BT and all its approval structures internationally. So it was basically the basis to answering Sasol's RFP and getting approval for this model with IO.
Let's go back to paragraph 22.
Okay.
We were at 2.3, in the past. Now we're on 5 billion. If you could take me through the difference, how did that come about? I didn't see the spreadsheet versus the first one there. Yeah.
I can provide that spreadsheet to Advocate Lebo at a later point, but to my mind and memory, it was predominantly the revenues brought on from BT's existing customers, and it would be transferred over to IO, and then there was a different element which says IO possibly would gain more of those particular customers' budgets because it had BEE credentials, so we call that section BEE upside. So it was the transfer of the revenues from those customers plus some BEE upside, and that revenues and profits filtered through to the bottom line at the same multiple of about 15, then gave us a 5 billion valuation.
And when you say transfer of the customers, how would that happen? How would it happen? Would it be meaning you are pitching again to BT? How would that transfer?
So as we understood it at the time, it was pretty much the proof of concept at the time, and why it made sense to us was that is how Sasol was happening. So Sasol had, I believe, 7 service providers. It narrowed down those service providers to about 3 or 4, and the big driver behind their process was getting an empowered ICT partner. So BT would gain upside by handing over some of its customers to IO, as I understand, and the transfer would take over the next 2 to 3 years. So a percentage of the contracts would move over to IO. IO would act as the sales prime, and it would, through an alliance agreement, subcontract work to BT.
And the profits from that sort of transfer would have been what, sort of 180 million times the 15 PE?
In this instance, yes, as our first drafts, because we only used selected customers and not the full drop-down.
Yes, and what were the additional profits coming from there, because you multiply them by the 15 PE which you used to get to 5 billion?
I think probably about
170 maybe times
about
50. 200 million. Yeah. And what were the profits for the 2.3 billion? Can you remember that?
157.
157 million rands. Okay, so 157 for the old business, and then say roughly 200 million for the new customers transferring.
However, the old 2.3 billion, we might just note that BT, the 30% ownership of BT had not yet transferred over to IO.
Yes.
So the 2.3 million assumes that transaction has taken place.
Oh, I see.
So it's existing business plus an associated accounting earnings from BT, and that gave the 2.3.
All right, okay, good.
Mr. Sali, put differently for our normal type of person to understand in lay terms, the BT thing, as I understand it, was the pie in the sky. And once realized, we'll get to 5 million. If he doesn't realize, we'll never get to 5 million, by billion. Is that correct?
That's correct, but the 5 billion, Advocate Libba, was more hinged on just the Sasol RFI that was currently taking place, but that is correct.
And meaning that the bulk of that 2.3 billion was based on the Sasol contract?
No, the 2.3 billion
Right.
is the as-is business plus the BT's earnings as they are on their own.
Oh,
30%.
I see.
So 30% of BT is owned by AWI, who's the holding company of IO. And at some point, the view was to transfer that 30% over to AWI, and IO would then absorb in those associated profits, so 30% of the BT profits. It was divorced from customer transfers or the empowerment model.
So the value on the 2.3 billion included the BT transfer? No.
Yes.
The BT transfer, but it didn't include the 30% earnings that will come through.
So it
later.
included the 30% earnings of
Yes.
the transfer of the actual asset from AWI over to IO, but
Yes.
it didn't include any customer transfers
Yes.
from BT over to
Yes, meaning the customer transfer then became that 200 million
Yes, exactly.
times the 15 PE.
IO. Yes.
Yeah, okay. All right. Okay. And when you did this 5 billion valuation, what was the value of BT then, by then? Was it the same as the original amount, 650 million?
It was about six. So the 650 was referenced back to the audit valuation that was signed off the prior year. So we were in August 2016 for that 650.
Okay. Oh, I see. Okay. All right.
Okay. On the 19th of July, Dr. Survey requested to meet myself and Abdullah around the listing. This meeting was set for the 24th July 2017 in anticipation of meeting Abdullah. In anticipation of the meeting, Abdullah asked me to prepare a list of issues to raise and to be discussed. Together with the latest 5 billion valuation included in the draft PLS, I prepared this and Abdullah then incorporated it into an email on the 24th of July to Dr. Survey. I attached the email together with the draft PLS AS3, which was circulated to Hardy, Young, Hamildin, and myself. At the meeting between myself, Abdullah, and Dr. Survey, the BT-IO model is discussed at a high level and the draft PLS structure reviewed. Based on the storyline in the new model and supplementing other Seconjalo Group IT assets into IO, Dr. Survey was of the view that the desired value of IO was to be set between 10 billion and 15 billion. It was, however, agreed that the information provided by the BT team and the pipeline of potential investments should be reviewed to justify the 10 to 15 billion value range. At this meeting, Dr. Survey's recommendations were incorporated in the draft PLS and a valuation of 13 billion was determined. The revised document was sent by myself to Dr. Survey on the 24th of July. I attach an email as Annexure AS4.
Okay, let's just stop there and check. Annexure AS4 talks about, is that this full document here?
Yes, that's sort of the initial summary pre-listing document.
Yeah. Okay, and tell me, the 2.3 and then going to 5 billion rands, did it include these companies which you were planning to acquire?
So it included those acquisitions. It included BT as on an asset value basis rather than an earnings value basis. It included a project for national health insurance, and it also included the BT customer transfer. So the very last page of Annexure 4 is sort of a breakdown of how that valuation is built up.
Yes. So let's just go through sort of moving from 5 billion to 15 billion. What are the differences there on that spreadsheet?
So the first difference is that two things happen within IO or BT, the BT model. There is a take-on of more customers, of BT's customers. There is also an increase in terms of or an acceleration on how those customers come on board. Instead of coming over 20% in year one, 30%, it comes over a bit more aggressively and transferred more aggressively, and more of those customers are aggregated in that revenue line over there for IO, or the profit earnings line for IO. Then you've got BT as an asset value, and here's where the new BT asset value gets done. At that time, the AI finance teams and internal evaluations are being done for audit purposes, and the DCF value comes out to 1.3 billion. You've also got acquisitions at a multiple of 15, and that gives us a 1.5 billion increase in value. And then the NHI prospect was valued at 2.1 billion.
So on that spreadsheet, we got the first PE is like the 15 PE, and you go to 10.7 billion rand.
Yeah.
What's that one? And then you add something else to take you to 15 billion.
So three things get added. So the first thing that happens after the 10 billion earnings value is calculated is that the earnings from BT as an associate is stripped out so that we don't double count it.
Yes.
Then we add on the asset value of BT instead of the earnings value. The acquisitions pipeline that was presented by Kevin Hardy at a multiple of 15, and also the BT slideshow that we received for national health insurance, which was a synergy between HST and BT.
Yeah. So we move from like 5 billion to triple the value we add 10 billion to this valuation.
Yes, we do.
By just changing the numbers and all that.
I agree. And that's why part of the discussion is to say that this number needs to become an auditable number before we can actually go forward with a document. But I believe at that time, that document and that valuation of 15 was just to prime or set everyone's mind in terms of a value.
But it was not, you wouldn't, given that things have been stretched so much, going from 5 billion to 10 billion, it's...
You wouldn't be able to take that through an audit process, and I think that's why the final valuation that gets done drops off most of the items that are added here.
And then IO, in the beginning, it's now put in at 9 billion, basically. Why is that?
IO
in that spreadsheet there.
The existing IO, let me just go back to that.
Versus what it was put in on maybe in the first spreadsheet.
Okay. So these earnings for the 2018 should be 2019 period. All those forecasted earnings were adjusted upwards to say if these businesses receive the capital injection, how could all of these businesses leverage and grow themselves organically? Yeah. But that itself was also very much an extremely rough estimation.
Yeah. And I'm asking this because there's been so much talk about this valuation, and I've been curious to see how it has developed, and now it's becoming clearer and clearer that, things have been stretched a bit here.
Okay.
Mr. Sali, I'm not a financial person, but with my limited knowledge of finance, it appears to me, and I'm putting it to you, this is a juggling of figures, and the end result is a thumb suck.
At this stage, yes, Edward Lubba.
Thank you.
But perhaps while you're on it, because you can go to the next paragraph, which then moves the valuation to 20 billion. And we can see that in actual fact, from what you've presented here, the base case is 2.3 billion, and that is verifiable and real. Beyond that, everything is an adjustment upwards in terms of saying that's the target. Now, what has to change in order to reach that target and that valuation? And all of those are, if you like, extrapolations of what might be, what could be. Should this happen, we would be able to reach that value. So it is a question that says, if one had to go with your pre-listing statement, and obviously we will come to that just now in terms of the BT component of this, that anything above the 2.3 billion was because targets were set at what an expectation of valuation would be, and numbers then manipulated to say, to reach that target, this would have to happen, but they were not real. They were the question of actually saying, if this occurred, we could get to that number. If that occurred, we could get to that number. With that, so that the reality is 2.3 became 20 billion.
In the build-up to the
Pre-listing.
Yeah, so to answer that, the build-up phase before we get to the actual pre-listing work, that is 100% correct.
Okay.
Let's just look at BT, that spreadsheet again. You have put it at 1.3 billion, and you said the difference was when you change from the asset base to the earnings base, isn't it? Come again there, yeah?
So
just explain that one.
Within the first valuation model, the BT associated earnings of 30% was 108 million, estimated for 2019, and that at a multiple of 15 gave rise to its proportion in the 2.3 billion.
Yes.
Looking at other valuation models in the market at that time, the thought was to say BT's 30% equity earnings shouldn't be looked at in terms of the earnings they provide, but rather the total asset value of BT,
yes,
based on a discounted cash flow.
Yes.
So you'll notice we take out the associated earnings out of that calculation, it gets subtracted, and then you add on the actual perceived asset value at the time.
Yes. All right. And then the 2 billion rent, the last figure there that you put just above the 15 billion, 2.17 or so. What did you plan to do there? Because, I mean, the NHI hasn't even started, so I'm just wondering what you were planning to do there, just if you could add something there.
So that was added in, as Commissioner Marcus says, just to see what the possibilities were at the time in terms of building value through different projects and scenarios.
Yes.
And that's one of the elements that gets dropped off in the final valuation because it's something that wasn't probable.
All right, so I think somewhere you say that this was double checked by Grant Thornton, I think.
That's when we get to the actual listing process. This is the build up to that listing process.
Right.
At this point, it's all internal.
Just to test the issues and see whether you can, how far this valuation can go. Is that what you're saying?
Yes.
And then you go to get an independent party to stress test this thing and all that.
So,
is that what you're saying?
So when we get to the actual listing process, as with Premier, it would have to go through a full audit process.
Yes. And then you'll take us through what survived, what didn't survive.
Yes.
All right. Okay. All right.
On the 8th of August 2017, a meeting is held at Dr. Survey's Clermont offices where he briefs Abdullah Hamildin, Nok, Salim Young, Njambulo Jiki around the ICT market and what the team should be considering from a value proposition perspective. I attach the minutes of this meeting and an email sent to myself by Jiki marked AS5. As it will be noted from the document Jiki points out that Dr. Survey's valuation expectation of IO was 20 billion. With a backdrop of meetings held and a target value set,
Just hold on there. Sorry again. AS5, and you are saying there's a 20 billion valuation. Is there some line there where they refer to it?
So what happened here, Commissioner, was I was not present in these meetings, and I asked one of the corporate finance teams in Njabulo Jiki to summarize the takeouts, and the next mail you'll see he labels it Dr. Survey's listing lecture takeouts, and in the documents what the discussions were, and it's a bit more detailed than what the minutes of that meeting were. And in there describes and says what he believes because of the ICT market and where it's going, what the planned target value was.
Yes, all right, okay. Thank you.
With a backdrop of meetings held, and a targeted value set, the team continued to work towards achieving a target which would withstand audit. Hardy and Olwager then continued to provide further information to supplement and build the IO value, including BT and HST, a current subsidiary of IO, collaboration document which addresses NHI, a BT strategy document for a better view of a roadmap and the new model. Olwagen also sends information about cybersecurity and the market size. He also forwards over Markham data. Okay.
Can I stop you there, please? And let's go back to Annexure AS5. And this is a letter from Njabulo Jiki to you, I think.
Yes.
And it goes, paragraph 3. If you could just explain that or sort of read that for us.
Targeted market cap. The targeted market cap is 20 billion for a listing by November 2017. My sense is 10 billion would be bronze. Anything below 10 billion is a dismal.
So, I mean, what do you think it means? What was Njabulo Jiki trying to say here?
So effectively, I think what he said is the takeout out of the meeting was that based on all the plans and the vision for IO, anything below 10 billion is something that would not be acceptable.
Okay, all right.
But just to clarify, this is notes of the meeting, and therefore this is a reflection of what Dr. Survey was saying in that meeting.
I think the minutes detail who says what, but in Njabulo's email, I don't think he specifies exactly who said that.
No, but I'm saying it's from the meeting
that,
with
yes.
Dr. Survey.
Yes.
Yeah.
Okay. On 14 August 2017, Abdullah sends Dr. Survey an update of the work done on the PLS, CAS6, and on the 28th of August 2017, Abdullah emails Dr. Survey and advises him that based on the available information, a valuation of 8 billion was attainable and could withstand audit review. Subsequent to the email, Abdullah advised me to add other investments of the Sekonjalo Group to increase the value. I then achieved the value of 10.2 billion. According to the best of my knowledge, Dr. Survey was provided with this document, and he advised Abdullah that certain investments could not be included and that Abdullah should try to get above 10 billion to a 15 billion range. On the 18th September...
Just hold on there, sorry, yeah. So you had to put some IT investments from AEI or what? I mean, in
the greater Sekonjalo Group.
Sorry?
I think ICT assets from the greater group.
And you couldn't include them?
Based on, I think there's an email trail that comes out in paragraph 29, that where Dr. Survey says no, that we should not be including certain of those items.
Yes, and including them took you from 8 billion to 10.2, and then it was said you don't have to include them, so it should have gone back to 8 billion, isn't it?
Yes,
The value should have gone to 8 billion.
yes.
All right, okay.
On the 18th September 2017, after further discussion with Abdullah instructs me to revise the valuation upward to 15 billion based on Dr. Server's input. On the same day, Abdullah then emails this revised valuation to Dr. Server. I attach in this regard Annexure AS7. The process above was performed internally without the involvement of external advisors, but it set the tone for the pre-listing statement and provided the team with a targeted expected valuation which we had to work towards and achieve in the formal process with external advisors and particularly the auditors for sign-off of the valuation.
Okay, let's come again there. So, in paragraph 28, we were at 8 billion rand, okay? And this goes to 15 billion, and you have explained, I think, the issues, and we are not there yet with Grant Thornton and the other guys. So you guys, you said, look, we'll take it from 8 billion, add another 7 or so to 15, and then we'll take it through the review process. Is that correct?
So I think what happened there is that the internal team's minds were primed around this target value now, and we understood the different components that were fed in from BT, and we would now need to go and work through models to understand how we actually achieve that value. But obviously in the sense that Grant Thornton would be able to sign off and that there was sufficient audit evidence.
And you are going to tell us about what was finally agreed.
Yes.
In terms of this spreadsheet?
Yes.
Yeah, all right, thank you.
Before we proceed to the next topic, Mr. Sali, I have information that during this period that you now testified, that there was a discussion between Dr. Survey and Dr. Machilla about the pre-listing and the values. Do you know anything about it? Was it in your presence?
Advocate Libbe, there was discussion around the PIC and the involvement similarly to that of Premier Fishing, and there was a con call where I was present where Dr. Survey had a discussion with Dr. Dan, and I'm not sure who else in the PIC, sort of getting them ready to say, well, we are and we do have a roadmap for this for this ICT listing, and that he would come and discuss, or that the team would come and discuss that at a later stage.
Do you have perhaps a date of that meeting? Of that discussion? If not,
Advocate Libbe, I think that discussion takes place around the meeting with Dr. Survey at the end of August
2017.
2017.
So would it be correct to say that even before there was any finalization of the valuation?
Sorry, that's July. I think it's July.
Right. But the question is, would it be correct to say even before the finalization of the valuation and even a draft PLS statement, Dr. Survey was in discussion with Dr. Machilla from the PIC? Is that correct?
I think that is correct based on the fact that they were also discussing Kevin Hardy and his compensation, as Mr. Hardy's statement notes.
Chair, we're going to move to a new topic now. Is it perhaps a convenient moment to take the tea adjournment, or shall I continue?
I think let's take the adjournment. Let's take the tea adjournment until 11:20. Yes, Mr. Sali, you're still under oath.
Okay, thank you.
Thank you, Mr. Sali. Will you then please proceed on paragraph 31,
Okay.
the listing process and AO valuation?
On the 22nd of August, myself and Abdullah meet Investec as possible sponsor broker of the IO listing. However, on the 13th September 2017, Abdullah informs the team that he had discussions with PSG Capital, and as they were at the time the sponsors of AWEI and they were known to the Sekunjalo Group, we would use them in the listing process. On the 13th September, the first meeting between PSG, AEI and IO teams take place. David Tozy and Willie Hannibal of PSG are engaged on the 4th of October 2017, and on the same day, Hannibal addresses an email in which he outlines PSG's role and sets timelines. At this time, Abdullah also made it clear to the team that the target date is tight and that the Sasol bid required IO to be financially capable of executing the bid. He further noted that markets and the political climate in 2018 were uncertain and that it was best to push to complete the listing before end of 2017.
I'm sorry to interrupt you, but I have an email that I want you to have a look at. It's not part of your presentation. It's an email I obtained, and it's from Willie Hannibal. Who is he?
Willie Hannibal is part of the PSG team.
It is dated the 27th of September. It is addressed to you, and it's copied Khalid Abdullah, Nahid Khamildin. We know they are. David Tozy, is he from PSG?
From PSG.
The title is Ray Market Sounding Intro. I'm not going to read the whole mail, but the important and interesting paragraph is the last paragraph, where he states, important is the date, 27 September. We understand that Dr. Survey wants AO listed before the end of November 2017 due to the pension fund's year-end requirements. So we will need to move fast here. Can you just have a look at this document? Can you recall such an email?
I do, Advocate Libba. This mail was addressed to me.
And it would appear that the PSG people already knew at that stage that the GEPF will be involved. Or am I not correct?
Based on the contents of the mail, yes, Advocate Libba.
Thank you. Please proceed.
Sorry, I'm not quite sure I'm with you. So in essence, what aspect of the pension fund requirements would have been affected by the listing? I'm just not sure what the implication of, obviously there's two implications. One, that it was known that the GEPF would be a source of funding. But what would the pension fund requirements be that had to be met by the year end?
Commissioner, I can't answer that question. I don't know what the context of that comment from Willie was. Myself and the AEI corporate finance team was tasked to build a share value around the target valuation of 15 billion. The calculation of the valuation of 43 Rand per share was based on forecasting profits from both the existing IO companies as well as the profits and revenues that would result from the proposed BT IO model described herein before. The forecasted profits, which ended up being 749 million and 105 billion, excluding minorities, in the 2018 and 2019 financial years, respectively. These profits were multiplied by a forward price earnings multiple of 20 and 14 in the respective years. This amounted to a valuation of 14.7 billion. The total shares in issue post-listing after diluting AEI down to 49% amounted to 344 million shares. Therefore,
sorry. So the profit, is it sort of, do you have it as a range, the 749 and the 10.5 billion?
No, the
What
thought,
is this? Yeah?
no, the thought around that was to prepare a minimum of 2 years forecast. So the 749 was the year after listing, 2018.
Yes, the first year.
The
after
first year,
listing.
and the 105 billion was the second year, which was the 2019 financial year.
Okay, I see. All right. And then the first year, there was a PE multiple of 20.
Yes.
And then the second year was the forward of
The forward
40.
of 14.
Of 40, okay.
The total shares in issue post-listing after diluting AEI down to 49% amounted to 344 million shares. Therefore, the 14.7 billion divided by the number of shares in issue post-listing amounted to a value of 43 Rand per share. The full valuation model of IO as reviewed and which was eventually signed off by Grant Thornton auditors is available to the Commission should it be required.
Just for the record, Mr. Commissioner, it is available. It's a large volume of documents, but we have it available on an electronic stick.
And just a question there then, what value did the model, what value did Grant Thornton come up with? Because we said they had to remove a number of things and all that.
So I don't think it's explained quite well in this section, but if you link it back to the previous section, Mr. Commissioner, almost everything that were bolt-ons or add-ons were removed. What remained was to use Project Zebra in its fullest in terms of bringing on the customer forecast. And then there was also a view of attaining market shares in the retail, public sector, and financial services sectors based on market data, Gartner data that was provided by BT. That a far smaller part, but the primary driver for the forecast was the alliance agreement and the Project Zebra customer revenues.
And what was the final valuation that GT gave?
They signed off on the 14.7 billion, with the 2019 year having a profit of $1 billion.
But then there was no difference between the 14.7 and the 15, which was in your internal model.
Internal. I think the number ends up and comes to the same value, but the components there are dramatically different.
Oh, I see. So the mix was different to what
Yes.
yeah. All right. I think then we'll have to get that document.
Okay.
Yeah. Okay.
Can I just, before I forget, Advocate Leber, what do we make of the email that you showed the witness? Is it this document that you're going to hand up, or?
I read it into the record, Mr. Commissioner, but I think I must perhaps hand it up as part of the record of the Commission.
Please, thank you.
Yeah, I think just in a nutshell, give us the difference between the internal model and what Grant Thornton, came up with, just for the record, just in a nutshell, in a summary.
Just to correct that, Grant Thornton never built the second, this is the formal model. They audited they audited the model.
Yeah.
So both the pre-listing model and the actual real process of listing, both those models were built by the internal teams, but the second one was audited by Grant Thornton. The fundamental differences, as I said, was to remove things like the NHI. One of the key things is that because we had not engaged any of those target companies to the point where we had a signed term sheet. We couldn't include them in our valuation, so they were removed. And looking at what was left in the final model, it was the existing businesses which were basically scaled up because of the fact that capital would be injected, right? And secondly, because there was a belief that they could leverage off the synergies of the BT relationship. But the primary driver was the customer take-on from BT.
And meaning that the figures had to go up because quite substantially, because you actually removed some of the things that were there.
Yeah, the final, you're right, Mr. Commissioner, the final Project Zebra take-on of customers was using the document to its fullest.
All right, thank you.
Just for the record, Advocate Libber, this document, we had copies of it in our file. I didn't realize that it was the same document.
They are not copies in the file.
Yes, but in any event...
we will supply the Commission with further copies.
I'm giving it an exhibit number as AS8A, small a.
Appreciate it. Thank you.
AS8A. Okay. Yes. I've just been corrected. It was not in the file, but it was a loose sheet that we saw this morning.
The key driver to the forecasted profit, which gives rise to the 43 Rand valuation, is the take-on of the BT customers as a result of the required empowerment credentials. It is necessary to point out that Hardy provided the audit team of Grant Thornton with supporting information substantiating the assumptions made for the forecasted revenues as per the emails attached Year 2 marked AS8. Hardy and Ndwele further held a meeting with Grant Thornton and provided the auditors with information on BT-IO model and discussed the reasonableness of the forecasts. Grant Thornton and PSG also requested the BT alliance agreement between BTSA and IO, as well as the legal basis for supporting the forecasts. It must be noted that from a listing team and service provider's perspective, that I believed at an early stage that we were engaging the CEO of BT and its team who had full authority to provide the information on which the forecast would be built, and that they would introduce us to companies to target for acquisition. The information provided by Hardy, Olwagen, and others ultimately formed the basis of the valuation of the IO share price. This information and assurance was regarded as credible and reliable, considering that Hardy acted in his capacity as CEO of BT. It, however, later becomes apparent that Hardy was not acting with the authority and/or consent of BT, which ultimately has an impact on the transaction relating to the transfer of AEI's 30% share in BT to IO in the 2018 post-listing. According to the best of my knowledge, Hardy was officially appointed as CEO to IO on the 17th November 2017. Okay. It is necessary to point out at this stage that much later, and on the 23rd of August 2018, BT addresses correspondence to Hardy and Young of IO, in which they set out their concerns related to alleged confidentiality breaches. I refer in this regard to AS9.
Sorry, Mr. Sally, can we move to AS9? And perhaps to ask you if you could look at paragraph 3 and read that in full.
Paragraphs 2.2 to 2.5 of IO response letter is simply not correct.
And just to indicate that there had been concerns from BT to AYO in the letter of 15th of June, and their AYO's letter of reply was 3rd of August, and this is a response to that correspondence. Is that correct?
Yes.
Okay, so if you could stay with paragraph 3 for a moment.
Is not correct, and nothing you have said in the AYO response letter adequately address how AYO came into possession of BT's confidential information and why AYO thought it acceptable to disclose such information in the AYO pre-listing PLS without BTSA's consent. A bland statement that we are of the view that no confidential information of BTSA was disclosed in the PLS unfortunately does not give BTSA comfort. We need not remind you that the directors of AYO assume personal responsibility for the contents of the PLS and the reliance on external advisors, such as AEI Corporate Finance, does not absolve them from any misstatements. AYO had not taken the time nor the effort to analyze the PLS in detail and extract those provisions thereof which constitute misleading information, BTSA's confidential information, and a breach of the alliance agreement. We have taken the liberty of highlighting a number of, but by no means all of, those provisions to ensure that there is no ambiguity in this regard. These provisions are the following: the continuous reliance on key strategic relationship between BTSA and AYO indicates the investor a much closer working relationship between AYO and BTSA than what was envisaged in the alliance agreement. AYO disclosed BTSA's dividend policy stating that 50% of the BTSA profits are distributed annually to its shareholders. AYO stated that its anticipated revenue is to increase by 825%, predominantly from existing customers engaged by BTSA who are anticipating to move.
Perhaps we go to 4.4.
Okay. AYO forecasted revenue was based on the transfer of services and products over time to service BTSA's existing primary customers. Okay. AYO anonymously listed 3 of BT's primary existing clients in South Africa, including an estimation of the envisaged revenue to be transferred to AYO from such customers in the 2018 and 2019 financial years. AYO stated that the market research performed by AYO in collaboration with BTSA, engaging their 3 primary existing customers, indicates that these companies are likely to shift their services to suppliers which would improve their preferential procurement spend. AYO modeled its business case on the actual IT spend from BTSA's 3 primary existing customers and reflected the actual spend and revenues generated by BTSA from these customers.
And if you could then just deal with paragraph 6.
Not only was the information relating to BTSA's existing customers, its revenues, and anticipated transition of BTSA's existing customers to AYO not provided to AYO, such information and disclosures are not factually correct. BTSA's consent was never sought nor obtained in any such disclosures.
Paragraph 8, the question of the development of a customer pipeline was AYO's role and responsibility and not something that was to be based solely on its relationship with BTSA or the transfer of all or any of BTSA's customers to AYO. This is wholly misleading and not reflective of the contractual commitments of the alliance agreement. Now, this letter was sent to AYO in August, 23rd of August.
2018.
In 2018. And was any of this matter of dispute about the PLS and what was stated disclosed to the PIC?
I'm not sure, Mr. Commissioner.
And perhaps if we could find that out, Advocate Libber, whether they were aware of this difference of view and what was transpiring in relation to IO and BT.
Noted, Mr. Commissioner.
Okay, and therefore, obviously, as you state there, that this was a major concern because the essence of the build, as you have said, on the valuation was an assumption of the reliance on BT customers moving over to IO and the connections there. So the implication, how did you interpret the implications of this letter for the functioning of IO and its valuations?
Ms. Commissioner, I, at the time, never really considered the impact because at that point, the executives at IO were driving to do acquisitions aggressively and to then build up those numbers almost from a different standpoint, to say they would build and make up those numbers doing those acquisitions which were not included in the forecast. But furthermore, Kevin Hardy continued to speak to customers such as Anglo and others, which are BT customers. So there was a grey area in terms of everyone else's understanding around how these customers would transfer, because the individual tasked to move over from IO or from BT to IO was continuing to lead everyone in the direction of these customers are coming over. But this letter itself, in the current context, obviously has a completely different interpretation or meaning.
And the listing and the raising of capital was for the purpose of acquisitions. The 4.3 billion of IO was intended to aggressively acquire new companies and new business.
So there were three elements to that. The 4.3 billion was earmarked to do internal projects where the existing subsidiaries could leverage, so there were working capital loans for them to grow themselves organically. There was budgets earmarked for customer take-on, because for Sasol itself, there was a significant amount of money that needed to be spent to onboard that customer. And the third element was to go out and aggressively acquire companies at good multiples to augment the product and service basket.
And in previous testimony, we've seen that the funds raised were primarily placed with different entities, both related party and commercial banks and entities, earning interest, and a very small percentage of that has been utilized for the objectives raised for the objectives for which the funding was raised. Is that still the case? How much? Because my recollection is over 3.5, 3.7, 3.8 of the 4.3 was on deposit with various institutions.
That's correct, Ms. Commissioner.
So very little has been used for the purpose that IO was listed for.
Yes, I deal with the acquisitions later on in the statement, but that's correct. It is necessary to point out at this stage that much later, okay, we've done that one. As will be noted, BT also stated inter alia that it had not introduced IO to target companies as it stated in the IO pre-listing statement. The breakdown in relationship between BT, AEI and IO was a major concern to all. I have noted what Hamildin states about the engagement of PSG in regard to the listing process and fees payable to them for the services to be rendered and the final fee paid to AI Corporate Finance. I'm unable to comment on this fee, on how this fee was negotiated or determined. According to the best of my knowledge, this is an issue which would have been dealt with by Abdullah. Other than
Can we just, for the record, identify who exactly is AEI Corporate Finance? Is it a company, separate in the group, or what is the situation?
So effectively, AEI Corporate Finance is 100% subsidiary of AEI, but to the best of my mind, AEI Corporate Finance isn't really a functional entity. Myself and Jabulo Jiki was onboarded as directors of that business in the latter part, 2013, or after of November 2017. So AEI Corporate Finance is effectively a business where I believe Sherry Hendricks and Khalid Abdullah were the two directors on that business until the 23rd or the 25th of November.
Were they involved in the signing off on the PLS?
I believe, yes, both of them were involved in the signing off of the PLS.
Thank you.
Just as a follow-up there, do they charge fees when they do the work?
No, to the best of my knowledge, that fee for IO was the first fee charged by AEI Corporate Finance. Okay. Other than the forecasted profit and PE multiple, the shareholder spread calculation was a key consideration to comply with the JSE requirements for listing. The team would need to balance the spread by dealing with two conflicting components. That is the BE shareholder percentage and achieving the minimum JSE required 20% free float. The free float percentage was signed off by AEI executive formally on the 18th of December 2017 at 21.67%. Part of the process of achieving this balance was the creation of a union-based BE consortium, as well as selling off and transferring connected shareholder shares to external parties.
Can you just perhaps explain in more detail for the Commission what is meant by free float?
So effectively, Mr. Commissioner, for any entity to be listed on the JSE, other than when they actually get a special permission by the JSE, they need to bring that company to the JSE and they should have 20% of the shares allocated to open public. So by open public, it's non-connected, any party that has less than 10%. So the objective of this rule or principle is to ensure liquidity of the share and to ensure that there is tradability of it. Therefore, they want a 20% minimum for companies, 20% free float minimum for companies to be listed.
The same paragraph. The PE that was put, the PE that was put for this company for IO was around 16, isn't it?
2019 year, the forward PE of 14.
Yes. And it was compared with companies in the market like EOH, I think,
yeah,
and the others. But these companies have been in the market for a long time and they've got the track record in acquiring companies, not necessarily going to acquire companies, all right? So do you think this company should have gotten that 16 PE? It didn't have that track record that the other companies had built over time.
So from an acquisition perspective, Commissioner, IO itself and AEI, the broader group, in the past 5 years leading up to the listing had concluded with the same team a number of acquisitions and was able to and understood the process of acquiring companies quite well. And that's one of the primary reasons that AEI itself was still involved post-listing with IO to try and acquire companies, and we'll get to that at a later point. But to your point, it's a forward multiple on a company that is basically starting up in the acquiring process. So it is on the higher end of a multiple.
Yes, because it's fine that the other companies within the group knew how to acquire companies, but you have to you got to talk about IO actually and its track record, because you can never know what would happen, isn't it?
I agree with you, Mr. Commissioner, but I think the nature of how interlocked the teams are within the AEI group explains the mindset and the thought process at the time.
And do you have any view what kind of you said it could have been a lower PE, or you said it was at the high end. Do you have any view what kind of PE could have been appropriate? Besides the fact that the profits also, you could talk about that issue, you know.
So at the higher end of looking at a forward PE, I agree, but the comparative companies at the time were trading on a 16 plus, and certain companies like Adapt IT had breached past the 20. And the proposed 14 PE was something that we validated with the auditors at the time. So I believe between 12 and 14 would be reasonable.
And the profit figures, I mean, as we said, they were quite stretched, isn't it? I mean, those are even bigger issues there.
Yeah, the profit figures were aggressively based on the Project Zebra documents.
Yeah, you know, and it was a lot of, I'm trying to find a better word, not blue sky, a lot of assumptions which could happen or might not happen.
Yes, Mr. Commissioner.
Mm-hmm. All right.
Okay. BE Consortium. A presentation was done to union heads by Abdullah Hardy and myself at the Convention Towers in Cape Town sometime in November 2017, at which time we presented a market-sounding document in relation to IO listing and its proposed value. The unions later submitted applications for share allocations to Abdullah and Arthur Johnson at 3 Laws, who dealt with the administration of the share allocation and loan agreements. The total allocation of shares was thereafter approved by a shareholder circular, and an amount of 31,960,000 shares are allocated to unions at an issue price of R1.50 prior to listing. Johnson completes an allotment list and sends it to Abdullah on the 15th of December 2017. Abdullah reviews the list, and a final list as per the share register is reflected below. Okay. 15.395 million share issue is ultimately funded by 3 Laws, with 4.5 million shares in cash and 12 million being funded by a short-term loan. As explained above, the free float for the listing was an issue as 3 Laws held 20 million shares which originated from Sekonjalo Capital historically. Discussions was held between Abdullah and Johnson, and these shares were sold sold or transferred, as it would compromise the already tight free float requirement. It was agreed that these shares would be sold or donated to external empowerment funds, which are set out below.
Sorry, can I just ask 2 questions? If you say that 3 Laws funded those purchases, whose money did they use?
I'm not sure, Mr. Commissioner. Sorry. So based on previous testimony, and I believe, in fact, it's Premier Fishing that initially provided the funding directly to IO Technologies, but on the request of AEI. And subsequent to that, 3 Laws refunded Premier Fishing.
But they refunded it, so basically, I mean, if it came from Premier Fishing, would there have had to be in a board approval to give that fund, Premier Fishing board approval to give that funding over? And when it was refunded, where did the money come from?
So my belief is that 3 Laws paid the money into AEI, and AEI refunded Premier Fishing. The Premier Fishing Group was 100% subsidiary of Sekonjalo since its inception, and the way that the company operated pre and post listing is that it would provide operational loans. I believe even within its MOIO shareholders agreement, it's got the right to transfer and provide assistance to subsidiaries subsidiary and sister companies. So once an instruction came from AEI down to Premier Fishing, those executives would not necessarily know or understand what that funding was for, and they would fund up to AEI. In this instance, because of time pressure, they were told to transfer that money straight to IO.
So basically, it acts as a bit of a piggy bank? You can dip in and out? Is there a limit on the ceiling? Is there a ceiling of the amount that they can fund?
I'm not sure, Mr. Commissioner. I'm not sure of the
Okay.
details.
And in terms of all this BE consortium that is there, were there any intermediaries? Were these directly paid into each of these entities? Was there any warehousing that took place? Was it kept with any individual before being transferred to the organization? And can we get separately a list of all either the executives or the members of these different BE consortiums so we have an idea who they are? I don't need that now, because obviously some you do know, but some we don't. But if one took an example, there's been a lot of discussion in the media about Fedusa. Was that money paid or those shares allocated to Fedusa, or was there an intermediary?
So at the bottom section, Ms. Commissioner, is the shares that were donated which previously were owned by Three Laws Capital. So that's not part of the BE consortium funded shares.
Okay.
But based on the media reports, I believe that it was housed and it would be later allocated. But from myself, I don't know the detail.
And why would Three Laws own these shares?
That was part of a historical transaction or historical part of Sekunjalo Capital. I think 10 or 15 years ago, Sekunjalo Healthcare was going to be listed. It was a public company, and Sekunjalo Healthcare later then became TSL, which then later became IO. So this was part of quite an old structure.
And Three Laws is a related party company?
Yes, and the reason why Three Laws had to transfer or donate these shares to external parties is because of the pressure on the free float.
Okay, thank you.
Can you also perhaps just explain from later revelations in the press now, Defeme, I think it's correctly pronounced, who is Defeme Holdings Group?
Advocate Lubbe, I don't know the detail, but based on the press releases, I believe that there are one or two representatives of IO's board that's part of the DFMA Holdings.
Can you name one?
I believe Dennis George is one.
Thank you.
Just another question on paragraph 41 and 42. The shares in paragraph 41, were this given through a loan program? And then the 42, were they donated? Because when you add them up, they equal something like 75 million rands or so of worth of shares around there. If you say 32 million shares, and 20 million is about, 75 million or so.
So, Mr. Commissioner, I'm not sure about the bottom section, but and the pricing or any agreements that live in the bottom section, so that we'd have to ask the Three Laws team about. The top section was the R1.50 funding arrangement.
So Three Laws funded the full amount, no?
Yes. So they funded the full amount, but the Black Business Council, as an example, paid cash for theirs.
Okay.
And then the Inyatelo Capital, the 65 and the 500,000 also paid cash for theirs. The balance thereof was funded.
Okay, all right.
How did Three Laws decide on the three entities that it would donate to?
I don't have knowledge of that, Mr. Commissioner. PIC engagements and investor engagements. As stated above, Hardy had started the preparation of a market-sounding document to be presented to potential investors. Myself, Abdullah Hamildin, and Ndwele were required to give input on this document. I attach in this regard AS10, the market sounding document. I just want to make a correction here. This final market sounding document was not one that the one that Kevin prepared. He prepared the first draft, and then the final document was prepared by the full team. Okay. Abdullah's office then arranged for the listing team to meet the PIC investment team on the 16th of November 2017. On the 13th November 2017, Hamildin addressed an email to Hardy, Ndwele and myself indicating that the PIC would be in Cape Town the next day and that we could meet the senior team before meeting the investment team on the 16th. On the 15th November 2017, we finalized the market sounding document in anticipation of our meeting with Fidelis Madavo, Head of Listed Investments at the PIC. I attach in this regard as AS11 and AS12 an exchange of emails and attachments between Abdullah, myself and Hamildin, Hardy and Ndwele, and between Hardy, myself and Ndwele, AS12, is also copied to Hamildin, Abdullah and Young. At the meeting, we presented the IO listing to Madavo, who provided minimal comment after the presentation but noted the PIC was interested and we should proceed with meeting his team on the 16th for a more detailed discussion.
Just for the record, Mr. Sali, previously you referred to the PIC investment team. The only person from the PIC present at this presentation was Fidelis Madavo. There were
Yes.
no other PIC people there.
No, there wasn't. Okay. The meeting with the PIC on the 16th of November was attended by myself, Hardy, Ndwele, Walter Madzonga, and Mbuso Koza, with Victor Sini, Assistant Portfolio Manager, and Desmond Sibuya, an analyst of the PIC. A detailed discussion was held about IO, and Hardy and Ndwele provided input about the industry and the proposed BT and IO model. My input related to the history of IO and its current subsidiaries. On the 24th of November 2017, I emailed Sini a draft pre-listing statement a week after he had initially requested it on the 17th of November, as I had waited for the latest responses to the JSE review to be incorporated into the draft before submitting it. The final PLS was released to the public on the 13th of December 2017.
Just a question here. I just wanted to check. You got quite a number of market sounding documents. I think you got 2 copies or 3 copies. Can you explain those?
Those were just various iterations of the market sounding document.
Okay, so the final copy would be the more relevant
more
one.
relevant.
Okay, all right.
Okay. Sini thereafter addressed correspondence to myself and Hamildin in regards to the IO pre-listing. The team responds via Nomvuyo Duwe after collating the answers to questions from myself, Hardy, and Ndwele and Hamildin. On the 8th of December 2017, Sini requested me to move the listing. I escalated this request to Abdullah. On the 14th December 2017, Abdullah met me and dictated a response which I typed and emailed to Sini. I understand that Sini has already testified on this aspect before the Commission.
Can we just return to that email, Mr. Sali? What exactly, can you just read it into the record, what exactly was the response dictated to you by Abdullah?
Okay. Dear Victor, thank you for your email. I understand that many of these questions were dealt with in the presentation to the executive teams by our senior executives. From my understanding, the urgency for the listing as a result of the impending contracts with one of the big corporates have a need for black empowerment ICT players in what is driving all the urgency. I also understood that there is support from the PIC executives in the light of the BT agreement and growth forecast for Sasol and acquisition strategy. I would check with Khalid and the team, but I know that the listing is definitely proceeding this year, and this was a critical discussion which was held with senior PIC executives. This is just my view as sort of a worker bee in the system. But I will check with Khalid and Kevin and ask them to give a call to the relevant people. Of course, all of this is way above my pay grade. Kind regards, A.M. Sali.
Thank you.
Sorry, just for purposes of the record and benefit of the people who type our record, the person the witness refers to as Sini is Victor Siane.
Siani, sorry.
Next question then, from my side is that Victor Siani actually mentioned here, and I've asked the question before, I think, but he said that your response was very dismissive, in paragraph 51 of Siani's statement, and that he felt that, this transaction was foregone, conclusion. And Dr. Seve said he actually chastised you or remonstrated with you guys about that particular treatment. Do you want to comment? Because Siani actually said it was you who was dismissive to him.
So, Mr. Commissioner, the way most of the decisions and or communications would leave the team would first be with consultation of the senior members of the organization and the senior teams. So if there was a delay in any of the communications with the PIC, it would be because myself and the people on my level would be waiting for the right response to be given to us before we could respond. So unfortunately, it seemed dismissive to Victor Siani, but it was based on the fact that we would have to wait for responses before we'd send them on.
Meaning you actually had to wait for Mr. Abdullah to give you a response?
Discussing the item with him. Certain of the occasions I draft the mail myself if it's a quick mail and I could fire it off. But on these types of discussions which were far more sensitive, we'd wait for a consultation.
Okay, all right, thank you.
Okay. The final PLS was released on the 12th. What paragraph am I now? Okay. The final PLS was released on the 12th of December 2017 with the subscription offers closing off on the 15th of December. By this point, I had not engaged any other investors other than the PIC and the union members. Tozy of PSG was concerned and noted that we could not release the PLS unless he was provided with assurance that the listing was supported by firm offers. I understand that Abdullah engaged and met with Tozy to provide him the necessary assurance, and the PLS was then released by Tozy. The subscription offers opened and the PIC submitted a signed order for the full allocation of the shares on offer, which was received on the afternoon of the 14th of December 2014. I was advised by Abdullah that additional subscriptions of more than R1 billion had been received. This was mainly from connected parties close to the group who wanted to take advantage of the listing. At this point, the question around BEE and related parties potentially impacting free float was considered by Abdullah, and he communicated to the team that the full allocation would be allocated to the PIC.
Sorry, can I just ask you in relation to the connected parties for R1 billion, was this real? Was there commitment on them? If they're connected parties, was it there? I mean, what was the purpose of it to say they're in and then you can simply say, no, they're not in? Just explain how you understood this R1 billion from the connected parties' role in this listing.
Mr. Commissioner, so The connected parties are not technically connected, but they're close to the group in that some of them are shareholders of AEI and Premier, and I believe that their subscription offers were real, the Miramar investments and the like. There was a subscription by Three Laws Capital themselves of about 300 million, and then there was another one or two big allocations from external parties, but they had previous relationships with the group. So our belief at the time was that there was interest from these guys, and Three Laws Capital obviously came and applied for shares themselves as well.
And any understanding as to why the full allocation, given that there would be the ability to spread R1 billion of the 4.3, that the full allocation would be allotted to the PIC?
So as explained in paragraph 50, Ms. Commissioner, the reasoning given to the team at that point was the fact that the empowerment credentials of those investors had to be considered.
Was the PIC aware that there were other potential bidders?
I'm not sure. On the 20th of December 2017, a day before listing, Siani emailed me and requested IO and/or AEI to propose conditions precedent as requested by his approval committee. I understand that Siani has also testified on this issue to the Commission. I escalated this request to Abdullah, who noted that I should not respond and that we would deal with this in the new year, and this, as the signed irrevocable subscription order was already received on the 14th of December. Subsequently, discussions relating to conditions precedent raised by Siani's approval committee were held between the PIC representatives and IO and AEI executives in regard to the issue, and the agreement was concluded which aimed to provide protection to the PIC for the investment in IO. According to my knowledge, this agreement had conditions which was required to be met by the 30th of October. I should change that. I know that these conditions were not met.
Okay, question before we leave this section. Just in terms of the forecasts for the IO valuation and the fact that it relied a lot on BT, and generally we know that PLSs are not really interrogated a lot, but do you think probably that the PIC should have gone to see BTSA, given the fact that, you know, there was so much based on that for the PIC to invest without seeing BTSA?
So I believe that Victor Siani and his team met with, or I was part of the team on this, that met with him on the 16th of November, and they, in that interview, that obviously I have been introduced to Kevin as the BT CEO. So they very much had the view that the person presenting to them obviously came with the authority of BT, but in hindsight, I believe that should probably have been part of their due diligence.
So that they actually should have visited BT?
The broader BT team, yes.
The broader team, yeah, okay.
Interim results, February 2018. At the time of the 2018 interim audit, I was not an employee nor a board member of IO. As stated, I was appointed to the AEI board on the 22nd of February 2018 as the Chief Investment Officer. My responsibilities were limited and my focus was on mergers and acquisitions of AEI Limited and assisting the group companies in the investment activities. I was not responsible for financial reporting at group level. I have noted that Hardy and Odwele allege that I was present in a meeting with Dr. Survey, Abdullah and Hamildin on the 26th of April 2018. I was not present at this meeting and I am therefore unable to comment on discussions and who was present at that meeting. On the 26th of April, Abdullah requested that I meet him to discuss specific areas of concern he identified during his meeting with Hamildin relating to February 2018 financial results of IO. Hamildin had left for Port Elizabeth as her father had taken ill. She did, however, provide me with a draft spreadsheet in relation to the IO interim results on the 1st of May 2018. I met Abdullah later that day at his home, at which time we discussed the spreadsheet with the interim result. I noted that it reflected a profit of 50 million. I paused to mention that on the 29th, Abdullah had messaged myself and Hamildin to review the operating costs, as according to him, the operating profit of IO was too low and according to him needed to be in excess of 40 million. He wanted us to identify operating costs that could be capitalized as well as review the share-based payment charge. In an email dated the 30th April 2018, I attach here to AS13, Abdullah reiterates that the operating profit of 29 million compared to 28 million in 2017. He stated it need to be around 40 million in the 2018 compared to the 28 million in 2017. At the meeting of the 1st of May 2018, Abdullah requested that we review the operating cost information and we also focused on the share-based payment charge. It is necessary to point out that this charge was recorded at a zero value in the pre-listing statement. The methodology at the time of the pre-listing statement was to use the value of the share base on the most recent arm's length transaction at R1.50 and the issue price was R1.50.
A question there. In terms of those share-based charges, what was the total amount?
11.8 million.
That's a large amount.
Yes.
And it comes pre-tax, isn't it?
Yes.
It comes pre-tax, so it would have reduced the post-tax profits
yes.
by that particular amount, subtract the tax.
Yes.
Okay. All right.
Okay. If Mr. Commissioner, if I can just explain there, however, at the time of preparing the pre-listing statement, one of the documents in the pre-listing statement is pro forma financial information. So you take the existing financials of the entity and you go through the major transactions, one of them being the BE consortium. So the BE consortium was the reason for the share-based payment charge. And because we had bought Kalula Technologies and Puleng Technologies around the same time, the market price for those shares were 150 pre-listing, and that was used as a reference point for the BE charge. So the BE shares were issued at 150 and those previous arm's length transactions were done at 150. Therefore, the pre-listing pro forma financials had a zero charge in them. So when getting to the interim results period, the same methodology applies, means that the interim results should have also reflected a zero charge.
Okay, so they were not necessarily supposed to represent a charge. Is that
at that time, and I explain in the next paragraph of how that changes.
Later, okay.
Abdullah instructed that I reverse the share-based payment charge on the spreadsheet using the logic applied when concluding the pre-listing statement, and this resulted in a profit of 62.3 million instead of 50 million. On the 3rd of May, Abdullah presented these results to the IO board, who then approved it. According to the minutes of the board, the executives of IO were given the authority to amend and finalize the results if the changes required were not material. I attach the board minutes as Annexure AS14.
And can I just be clear? I'm not sure I am. So in essence, it started off that in the year before the profit was 28 million. In the current year under consideration went to 29 million. With the various adjustments made, it ended up with a profit reflected above what the board approved of 65 million.
Yes.
So is any of the profit from 29 million to 65 million actually real, or is it a manipulation of numbers that give you a profit of that level
So
that is not substantiated, that is not really accurate?
So there are various processes and steps that were followed, which I'll explain in the later paragraphs, and that process is still under audit review. And I think as I explain this, Ms. Commissioner, you'll get the clearer picture of where we are with that at the moment.
Just another question. Who was in the audit and risk committee?
In the Audit and Risk Committee was the members, which was Mr. Abdullah, and the other names, I'm not sure who the others are, but myself, Sapiwe, and Kevin were also invitees.
But how big was it? Was it 2 people, 3 people?
So there's 3 or 4 people, I stand under correction, and then the invitees.
And I'm sure it had sort of independent board members and all that?
I think they're independent, but I'll provide that information to Advocate Libba.
Yeah, because it's a Companies Act requirement. I would guess that you would do that. Yeah?
Yeah.
Okay.
It is necessary to point out that the board-approved results were different from the results which were ultimately released to the market. In this regard, I wish to highlight the following. As explained above, the board reviewed an income statement with a profit after tax of 62.3 million. However, after the board meeting, I approached Abdullah and expressed my concerns around the removal of the share-based payment charge and pointed out that the methodology to reverse the charge needed to be reconsidered. I advised him that I reconsidered the current available information about the IO share value and that this needed to be factored in and that the charge needed to be reinstated. So this discussion, Mr. Commissioner, effectively then says we know what the pre-listing methodology was, but the group methodology is to use a discounted cash flow and not to use the latest arm's length transaction. And at the point of reporting actuals, we would have to revert to the group policy. And at that point, that 11.8 million got calculated and was reinstated back into the numbers. Okay. This discussion resulted in the reinstatement of the charge. As a result of what I said, Abdullah requested that we review the costs again as the operating cost escalation was not in line with his expectation. Abdullah reviewed the detailed costs of IO with myself and identified certain costs to be capitalized or deferred. He then instructed that these costs amounting to 12.2 were to be capitalized or deferred. He also requested that we build an analytical high-level spreadsheet down to subsidiary level to justify the change made to the gross profit margin. During the cost review, we also noted an increase in a warranty provision for an investment done in 2016. This was, however, accounted for in the previous period at acquisition date and would overstate the value of IO's warranty liability. This increase to the provision was reversed.
Come again there. Can you explain that?
Okay.
What is it, the warranty provisions, and why are you reversing them?
Okay.
Yeah.
So in paragraph 64, in 2016, an investment was purchased by IO called Puleng Technologies. The warranty bullet payments were 3.1 million for each respective year that they would receive. So the total warranty provision gets recorded at acquisition to a total of 9 million. Right? So your total value is 9 million. After 1 year, they achieved their profits and an amount of 3 million was paid off to them in physical cash. So the remaining liability was about 9 minus 3, 6 million. But also, because there is time to go another 2 years before you actually pay the next payments, in finance terms, you discount and you present value that 6 million back. So the present value of that liability is about probably just over 5 million or on 5 million. What happened in the 2018 interim period was that the finance team had topped up that provision with another 3.5 million. So taking the overall liability to about 8.2 million. So the top up in that period went through the income statement. And if you consider the initial warranty provision was 9 million, and now you were topping back to 8 million, and you'd already made a full payment to them, and you had 2 years left to go. When you recalculated, that liability should not have been topped up. So that was an entry where the workings, to my mind, are accurate.
Okay, all right, thank you.
Okay. Abdullah also questioned the interest line as being low, but accepted the reasons provided by Hamilton that the monies were banked late into a high yield account owing to a delay in the banking process. No further work was done on the interest line. The net effect of all the changes was an increase of 3.4 million, taking the profitability from 62 million to 65 million. I emailed the adjusted spreadsheet to Twaita Peter, IO Group Financial Manager, on the morning of the 4th of May 2018. I discussed the amendments that Abdullah had required with Hamilton on a high level after the board meeting, and we met on the morning of the 10th of May 2018, but did not get into the discussions as unfortunately Hamilton received a call that her dad had passed away and she left for PE that day.
Okay, let's just recap. So the profits after tax were like 50 million at the beginning. They ended up being 65 million.
Yes.
What was the difference? What contributed to that broadly, the big picture?
Sorry, I thought the profits after tax at the beginning were 29 million.
The operating,
They were 50.
The operating profit was 29, and then the interest added on to that took it to the 50.
Yeah, to 50 million, isn't it? Yeah, okay. Oh, yeah.
Okay, so
the interest part, yes,
yeah.
the interest portion. Mm-hmm.
Right.
So the progression then from 50 million to 65 million, what were the big contributors?
So effectively it was capitalizing and deferring of costs that related to about 2 or 3 projects, and the reversal of the warranty provision.
Okay, all right.
Okay. I understand that in the absence of Hamilton...
Sorry. So the warranty, we said that could be fine, and then what about the deferred costs? Were they correct?
So the deferred costs, and I'm just trying to recall, is around the Sasol project was one area, and also we had opened up a subsidiary in Mauritius. All the costs were going through the income statement at that time for that Mauritian project, but we had not yet owned that entity legally. And that was basically a project which would come to fruition in 6 months' time.
Yes, so that could be deferred then?
Yeah.
Is that what
However, we're still obviously in the audit process at the moment, and the audit team will give us a view on whether they technically agree with all the adjustments made.
Yes, okay, all right.
Okay. I understand in the absence of Hamilton, Abdullah accepted responsibility for the unaudited interim financial results and approved the results as a member of the audit committee. The final SENS was circulated, reviewed, and comments were provided by the remaining executives, Hardy and Ondwele, who ultimately approved the release on the 15th of May 2018. My role with regards to the SENS was limited to a proposed change regarding commentary on the expected performance of the year-end financial results compared to the expectation of the pre-listing statement. In hindsight, I do believe more detailed work on the adjustments was needed before Abdullah approved the changes. Subsequent work has been performed in the preparation of the present audit, which was recently requested by the JSE, due to what I believe the evidence presented by the Commission. This process is nearing conclusion. I'm advised that the work done internally for the audit found support for certain of the procedures, but I am further advised that certain errors were also identified. The audit also identified 25 million rands worth of interest income, which had been omitted from the 2018 February results, as the interest was not correctly accrued.
So the final figures will probably be very different than to the figures announced on SENS.
Considering the 25 million interest income, it's basically interest revenue that has been excluded and should technically, not technically, it should actually have been included. I'm not sure where the final numbers will end up.
And what figures are we talking about? Is that the financial year end to Feb or what? Which figures?
No, the interim numbers in question. So what was found in the first week of the audit is that the interest gets banked on the first or second day of the following month, and that was not taken into account because it related to the February 2018 period.
Yeah.
So the profit should have been higher with that particular amount by 25 million.
Yes.
However, what is in question are all the other adjustments made.
Yeah. So the figures are what for the 6 months to what month?
February 2018.
February 2018. And then you still have to have figures for the year end now,
So
which
the-
is what? Yeah.
Yeah, so the audited figures of February 2018, I believe went through, and I wasn't part of the IO group at that point, but I believe that's gone through a rigorous audit process.
Okay, thank you. Let's go.
Deals investments by IO post-listing. Other than the work done in respect of the interim results period, my involvement with the IO was limited to assisting IO with targeted acquisitions. I point out that AEI supports all group subsidiaries in this regard. And as IO had limited resources, the audit committee of IO co-opted the AEI team to advise on the proposed transactions. It is necessary to point out that the deal structures presented by Nondwele, who was the CIO at the time, were not in line with what we believe to be good practice and proposed significant risk to IO. It became clear that Nondwele was not comfortable interpreting numbers. When this was pointed out to him, he indicated that he required guidance from us regarding the interpretation of financial information. I mention this as it has been alleged that my involvement in the acquisition process had delayed and/or frustrated certain deals from coming to fruition. In this regard, I refer to examples of deals which illustrate why I was uncomfortable with most of the deals that he, together with Hardy, presented to IO's investment committee. Target 1. The last offer letter, I recall, the management provided updated terms after being discussed with Ndwele on the 19th of April 2018. Under that letter, the value of the company was set at 61.3 million, placed on 100% of the equity and shareholder claims, with 54 million being attributed to 88%, which was being offered to IO, with the management retaining 12%. The issues and risks identified in the offer by AEI are noted as follows. Intangible assets of 15 million on the balance sheet. This came about through capitalizing staff and development costs. The products were not taken to market in the broad sense and had not been amortized. The process of capitalization without amortization meant that the profits were on average inflated by 3 million per year, and during the build phase, including the year under review, used to set the pricing. The intangible exceeded the net asset value of 11 million. On average, an average of 3 million of the debtors were past due and not impaired. In summary, the profits in 2017 on a sustainable basis and generated from trade was approximately 3 million, resulting in an adjusted price earnings of 25 times. So effectively, Mr. Commissioner, what this would mean is that if IO were to purchase this investment at 63 million rand, we would have to wait 25 years for this investment to pay back if you assume that all the profits were paid out. If you assume that certain of the profits needed to be held back for growth and or stability, the 25 years would then be extended even further. The IO negotiation process initiated offer and initial investment deck where Nondwele and Hardy had agreed to an indicative price of 77 million. This, however, set an expectation with no view of the AFS, and as noted above, this resulted in discussions being stifled when issues had been identified by AEI. Further risks identified were as follows. 12% of the shares were owned by 2 or 4 of the executive management who would be retained. The target holding company, who were divorced from operations, agreed that during the sale, the balance of the management would be aided in taking up equity. Nondwele and Hardy then agreed to set up funding structures without considering potential IFRS impact of this. When this was raised at the later stage, it was against what the target management expected, requiring further discussion with the existing shareholder. IO was in negotiation with the purchase of a sister company to the target as well. This target had related party sales of 13.1 million to the sister company mentioned above at an average GP of 40%. This contributed 5.2 million to the bottom line. No discount was negotiated by Nondwele Hardy owing to the two assets being purchased, selling to each other. Effectively, IO would be paying twice for the same revenues. Nondwele did not understand this concept. The purchase consideration would have been paid once off upfront with no warranties after the deal. Target 2. An offer letter dated 20 June 2018 was prepared where a valuation of 850 million was placed on 100% of the equity. A deposit of 595 million, being 70% of the purchase price, would be discharged initially, with the balance being paid over 3 years. The issues and risks identified by AEI are noted as follows. High concentration of capital. IO raised 4 billion, of which 1 billion was marked for BT. This meant that a third of the capital would be concentrated in a single segment of IO go-to-market strategy. The cash payback considering estimated free cash was approximately 15 years. The market cap of all the assets within the target's listed holding company is 568 million. The target contributed 42% of the group's total revenue. The asking price was set at 850 million for this target. Initial high-level AEIDD noted that the numbers presented were aggregated and not consolidated profit after tax. Nondwele at this point accepted and presented a profit after tax number of 100 million and did not understand the difference between aggregating profits and consolidating profits. After Dube explained this to him, she sourced the correct PAT number, which was significantly lower at 77 million, with eliminations in the group. Target 3. The sellers were expecting a purchase price of 1.4 billion for 75% of the shares. They were requesting a put option which allowed them to exit after 2 to 3 years, and IO would then own 100%. The 100% of the value of the company would then amount to 1.9 billion. The issues and risks identified in the offer by AEI are noted as follows. A high concentration of capital raised would be allocated to the deal. This meant that 65% of the capital raise would be concentrated in a single segment of the IO go-to-market strategy servicing one sector. The company manufactured, provisioned and distributed SIM cards. The advent of 5G and eSIMs put the technology at risk, as noted by discussions with industry professionals. The cash payback considering estimated free cash was approximately 15 years. High concentration of sales to customers and a primary customer contracts which would expire after 3 years. The sellers were not willing to warrant greater than 10% year-on-year growth on NPAT and would accept a maximum warranty period of 2 years. I point out that the examples referred to above could have exhausted the capital raised with high PE multiples, long payback periods and other risks noted above. After the resignations of Hardy and Ndwele, Lebogang Molabatsi, Victor Siani, and a broader team of PIC summoned myself, Gamildin Nomvuyo Dube, to explain why deals had not progressed as anticipated. At the meeting on the 16th September 2018, we presented all rejected deals by the IO board. At the conclusion of the meeting, Malabatsi and his team were satisfied that the deals were rejected for the right reasons and that the deals were not commercially sound. He also requested that the processes followed to appoint Ndwele as the CIO be investigated, as he did not possess the required skill to act as CIO based on the deals presented by him. He requested the PIC governance representative to engage IO chairman on the recruitment process, as this concerned him. I confirm the testimony.
Questions before you go further. When Hardy testified here, he raised a number of issues, and I'll just talk about two. That there was a lot of interference from AEEI in the IO management, including delegations, that he said that even to fly out of the country, he actually had to get permission from AEI, from Mr. Abdullah. Do you have a comment on that one? And then the second one was Hardy and others sent a letter about corporate governance breaches, and it looks like that was not acted upon, and that's part of the reasons that they left the company, if I can recall. I'm looking at their statement here. Do you want to comment on those two questions?
So, Mr. Commissioner, just to make it clear in terms of my position and involvement is basically it was pre-listing as part of the AEI team, co-opted for those 3 or 4 days during the interim period, and then predominantly to work on the IO deal flow process. Further than that, operationally, I had no involvement in the IO business.
Okay, all right. You wouldn't know the issues there.
So, based on the testimonies and also the fact that the offices always operated on a close-knit basis, I was fully aware of the letter that was written with governance breaches, and I've heard the previous testimonies on them. And the group does operate all its subsidiaries on a delegation or schedule of authority, where things like travel and stuff need approval processes. Why they were interlocked and interlinked with AEI, where IO is a separate business, I cannot answer.
In a separate but listed business, it's a public company, it's a listed business.
Yes.
Yeah?
No, I agree with you there.
Okay, all right.
I confirm the testimony of Gamildin that post-listing IO concluded the following transactions. It acquired 55% of Seasway IT Group for 165 million at a price earnings multiple of 5.7. That 5.7 based on the current projections will probably come down to a 4 multiple. It acquired 40% of Saab Grintech Technologies for 100 million. The total equity value has got a multiple of 4. It acquired 24% of Global Command and Control Technologies. This is a division of Saab Grintech Defense, which is also an AI subsidiary that was purchased out, but effectively that was purchased for the NAV value, and it's got a price earnings multiple of 1. 32% of the Vanani Group. I'm not familiar with all the details on that transaction, but what I am familiar with is the 50% on the Vanani FinTech Fund. There's been an aggressive pipeline and about 3 to 4 deals that are close to closure in the financial services space.
Is Vanani a related party in any way?
I believe they are, in that we own 32%, IO owns 32% of Vunani. Vunani also acts as the sponsors to IO.
But they are not a tech company.
No, they're not, but the one element that they working with IO on is this IO FinTech Fund.
Yes, but the Vunani Group is not a tech,
No,
it's a
it's not.
financial services
It's a financial services company.
company. Okay.
Okay. In conclusion, I wish to respectfully point out that the current subsidiaries and associated companies linked to IO are strong, cash positive and profitable businesses with management teams that have years of experience in their respective industries. This includes Sizwe, Puleng, Kalula, HST, DM, Afrozar and SGT. I wish to point out that IO currently provides employment to approximately 1,400 skilled employees. In my respectful view, the business is however in dire need of proper governance and decision-making structures, and the relationship with the strategic shareholders requires to be remedied on an urgent basis. Relationships with strategic investors, especially the PIC and strategic partners such as BT, must be the starting point to rebuild IO.
Can I interrupt you here? If I read between the lines, I hear a call for help regarding corporate governance at board level.
Advocate Lebo, I think you'd probably have to look at the previous testimonies to understand the claims and the issues around corporate governance and the breaches. So that paragraph basically leads to the fact that all those types of items need to be remedied currently and in future. Okay. And the strategic partners such as BT must be the starting point to rebuild IO. Should the above listed remedies be put in place and the teams refocus their attention on the promises as set out in the pre-listing statement, it's my view that IO will deliver shareholder value. It must be borne in mind that the promises as set out in the pre-listing statement is that IO is an ICT business that focuses on delivering revenues and cash profits to shareholders by providing products and services to a broad base of customers who needed the benefit of having an empowered service provider. On my estimation, the current existing business for a 12-month period will deliver 3 billion in revenue and an estimated 200 million cash profit excluding BT and excluding interest. This supplemented with a current acquisition pipeline and a revitalized BT relationship and current empowerment credentials can, in my view, deliver positive shareholder value. I'm cautiously optimistic that through the work of the Commission, that part of the recommendations will result in a refocused IO in which shareholder value is protected and the 1,400 employees can retain their positions.
Okay, let me just do the final question. Just in terms of the reputational issues that IO has been through, do you think those can be surmounted? Because when I asked the other people who were here, they were they were not sure about that.
I think the previous testimonies, Mr. Commissioner, especially from Hardy and Ndwele, was very much focused on the future view of those BT take-on customers and that future-looking business. So they weren't wrong in what they said there, but what they do forget is that all the other subsidiaries have almost a 20-plus year life in their own. So there are executives there that are well known that really understand this industry. So the senior management and executives in all those subsidiaries also need to be taken into account. So if you look at those real existing cash generative businesses, they are hampered by the current IO reputation, but obviously as things get remedied, the hope is that they will continue to trade and operate the way they've always done and grow from there.
So are you saying that within the subsidiaries, there could still be value besides the holding company, as we are seeing with Steinhoff, that, you know, Steinhoff
definitely.
is a holding company, but within the various subsidiaries like Star, Pepco, there could be value. Is that what you're saying?
In my opinion, Mr. Commissioner, most definitely.
Okay.
Is that it, to get to?
That is the evidence, Mr. Commissioner.
Yes, Mr. Sali, thank you very much. I don't know, you know, we're investigating the PIC and alleged improprieties there. We will, of course, make recommendations. I'm looking at the last paragraph of your statement. You are hopeful that IO would improve, if that's the correct term, but I don't know what our recommendations will be. Hopefully, our recommendations about the PIC and related matters might help, but there's no promise from our side. Again, but thank you very much for your time. I know that there might have been or will be consequences in terms of the evidence that you have placed before us, which is very valuable to us. It has thrown light on many aspects, particularly on IO, and I thank you. We appreciate your testimony in this regard.
I just wanted to ask, do you think there could be any consequences given your testimony here?
In terms of, Mr. Commissioner?
Any, like, recriminations, any victimization?
I don't think so.
You don't think so?
I hope not.
I'm glad to hear that. I'm actually glad to hear that. But as I said, thank you so much. I don't know if there will be a need for us to call you back for whatever reason, but if there are, please make yourself available.
I will, Mr. Commissioner.
Thank you very much.
Thank you.
All right.
Mr. Commissioner, that concludes the business for the day. There is one more witness this week, Mr. Raja, who will testify tomorrow on the daybreak transaction. So I request an adjournment till 10 tomorrow.
Yes, thank you. So the commission will adjourn then until tomorrow morning at 10 o'clock.